Hello traders, we will be backtesting and journaling from for the second week of August from the 12th to the 16th. So bring up your Doyle Desert Eagle, which is the Forex factory, and the chart of course. And our first day, Monday. We don't have a red folder. Move on to the next, like I always say. Tuesday, we have the core PPI. So we will be anticipating the core PPI the first day. Okay. And just for the note, guys, I don't trade CPI nor the NFP. I just don't trade these days. The price action will sometimes be clean and sometimes will just be shit, and that's the truth. If you have experience in the market, if you have an eye which memorize every day every chart throughout the year, you will know what I'm talking about. I just don't trade the CPI and the NFE, and I advise you to do the same. Now, some influencers on X, or formerly Twitter, they will tell you don't trade the day before CPI and the day before NFP, and Michael will tell you that also. Now, I come here now and tell you that it is okay to trade the day before the NFP and the CPI. Just depends on one factor, which is if you have a clean price action, a clean day, if you see your model, if you see that the price action is clear and respecting the PD arrays, and if you have a manipulation which is clear at 8:30 or at 9:30, anticipate. If you don't have these factors, these reference points, just just don't, and study the rest of the day. Don't take any trades even on demo. Okay, so let's get back to Tuesday. So in that day, we do have a profile. The profile, like at 3:30 to be exact, we were expecting a day profile which is all the session just go up 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 up. The NY retraces, takes a manipulation, and then goes up, but the price action wasn't clear. Never takes out some lows here and then drives up. That's what happened. So the news we have is at 8:30. So we come at 9:30 to be exact. So what do we have here? We know that we are looking for buys, but for the sake of the price action and the reference points, my system, my bias for that day was sells, wasn't buys. Okay, but and I know a lot of you were looking for sales on that day, as Michael also in the 2024 mentorship was looking for sales. Okay, we didn't have any opportunity for sales in that day, and when I don't have an opportunity for my bias to take on, I just get out at like 12 p.m. I just call it a day. That's it. I hop off the charts, I go make a coffee and rest for the day. That's it. That's what I do. So we didn't have any sales here. The price was respecting every PD array that was on its way. It took out run stops. It did go up. It did drive up. It was a driven up day, respecting and consolidating, and it was choppy. It was choppy on a one direction actually. Okay. So it just wasn't a tradable day. If you see that, and if you see a day like this, just don't come close, don't come don't come close any near of it. Okay, just get out, just get out, please. So we move on to the next day. We don't trade the CPI, as I said. Thursday, the 15th of August. We have three news driver at 8:30, so we will trade the 9:30 bell. Yep, here you have it. Here you have it. So, do we have the manipulations here? Do we have run stops here? Of course we do have. We have one at London. We have the second at the NY kill zone, to be exact, at the NY kill zone. So we have many run stops. We have a direction, we have a run stop, we have a bias, and this is your bias. You know it from the manipulations, and you anticipate the distribution. You can anticipate the manipulation, but just not now. At least give yourself 3 years to 5 years of experience, okay? And I promise you, you will have the ability you will have the ability to trade the manipulations, and and you can get a lot of RR, risk reward ratio, out of these trades. So, but that's just not my style of trading. Actually, I just anticipate the distribution, and I'm fine with that. I'm fine with that. Okay. So at the 9:30 opening bell, that was here. So one of my rules, and I want you to write that down. Okay. You just let it rest. You want the candle closes at the 5 and the 3 minute. Okay, and the candle after it, whether it's a news driver, whether it's the 10 a.m., the 10:05, you just want this candle and this candle to close out on the 5 minute time frame. Where was my entry? That was my entry, the high of the day. Oh, he is a gambler. No, I'm not. I'm not. If the price came down to here, now I know a lot of you were watching were watching the ICT 2024 mentorship, and they were looking for retracement. If we came down to the 30 minute and the 15 minute, we would have many fair value gaps down here. That's one. That's sorry. That's two, three, four. Many fair value gaps. I just wasn't looking for for the the retracement. I was looking out for the where is the run stops, where is the market shift. And if you build context and framework upon your trade, you will have a successful win rate. You will enter your trades every time. If you see that kind of attitude in the price action, just know, and I just know that the market makers are giving its hands, the price action is giving its hands to you to enter the trade. Okay, that was my entry, that was my stop, 580. As I said, my maximum is 450. My minimum to maximum points upon the trade. Price will not gravitate to these levels. If it does, it might retrace and then go up, and it might just falls down, and who knows, you have a market shift here. Okay, you have a change in the state of delivery if the price gets down here. So the idea was a new higher high, a new higher high. I know that that I anticipated at the high of the day, and you might uh, see it as an unlogical trade, an unlogical entry, but uh, through experience, through navigating through the market, you will see what I'm talking about. You will understand what I'm talking about. 1 to 1, 1 to 1.5. Okay, and I wasn't even looking left for relative equal highs, for relative. I don't give a shit. We have a bullish day. We have a bias. We are looking for buys, not for sells. Okay, yep, and the price completely go up. So if you missed that one, let's say you didn't get up, uh, let's say you didn't enter at that candle at 9:35 or 9:40. Okay, you have a fair value gap here. The market, a liquidity void actually of fair value gaps. So you would anticipate the price here, and your stop would be here at the 0.5 of this order block. Okay, let's see. Yep, here, just perfect, just perfect. To be honest, uh, and at the 0.5 of this candle, which forms the fair value gap at the first. Okay, this one between 9:45 to 9:55. So ask yourself, is it a logical stop loss? Yep, it is. So what about the TP? You have a run up to a 1 to 1. You can be content with a 1 to 1, and you can be content with a 1 to 1.5. But trust me, in that case, if you missed the first move, just anticipate a 1 to 1. It will be better, more safer. So that was for the world. So that was for the week, the second week of August. See you at the next week.